Bitcoin bigger than gold. Well, those are the words of a top tech investor named Anthony Pompliano, and Raoul Pal, the major hedge fund manager. He predicts Bitcoin will go as high as $1 million by next year. I mean, this is after the world's most known cryptocurrency plunged this weekend as missiles rained down in the Middle East, briefly falling to its lowest price in more than a month today. It's a roller coaster ride. You've got the plunge, and then you've got investors like that saying such pie in the sky things. But it does have people wondering and asking whether to get involved. And Suze Orman is out front now, one of the world's best known personal finance advisors and the founder of Secure Save and the host of the Women and Money podcast. So Suze, I mean, bigger than gold are big words, and you're hearing big investors talk like this. People see Bitcoin in the center of all this weekend, selling off when the missiles were coming down. How do you see Bitcoin right now?
Well, I have to tell you, I think there's some legitimacy in the possibility that Bitcoin could absolutely turn around here and go back up maybe to 80,000, 85,000. Some people are projecting 150,000, but that's not what's important. Because what somebody thinks it's going to do doesn't mean it's going to do it. You have to look at, Erin, what backs Bitcoin. It's people's emotions. It's not like a stock where you have a company, you have a product, you have earnings, you have a solid thing. This Bitcoin, the movement of it is simply based on the projections of people and are they willing to buy, sell, or whatever. So if you are going to put money in Bitcoin, I still say this is money that you can afford to lose because nothing is backing it. Remember, it was at 64 at 70 or 67,000 a few years ago, went all the way down to 17,000, all the way back up. So it goes up and down. So why are you investing in it? Can you afford to lose it? And remember, there's nothing backing it. So just think about that.
And then, Suze, if someone really gets the point of, taking all that advice and says, I want to do it, how do you even do it?
Yeah, I think the best way to do it for the majority of people out there is through an exchange-traded fund. Yes, you can buy the actual Bitcoin or do it on an exchange and own Bitcoins or a little bit of a Bitcoin. I think you're far better off for ease of buying and selling to look at a very large ETF, an ETF that owns a whole lot of Bitcoin and that really is solid. And I think if you could just do it that way, that would be the best way to do so.
The ETF way, all right, which is very significant because people do ask how. It's just like when you and I talked last week about gold bars, and you're saying, if you're going to do it, there's a way. ETFs, don't go about buying a gold bar. It's not what you think it is in terms of ease of sale and moving it around. I mean, but the reason, Suze, Bitcoin, is in people's eyes right now a lot is because of that unprecedented attack on Israel. It moved so much this weekend. And that attack is just part of the anxiety out there. Economic fears, now you've got fears of war, and all of this contributing to some pretty scary things. I mean, the average 30-year fixed rate mortgage today went to 7.71%. I mean, I can remember, what was it, 2 or 3 years ago when it was in the twos? I mean, this is unbelievable what's happened. It's a very scary time for so many people. Is there a flip side to this? Any way for people to take advantage of these rates that keep going higher and higher?
Yeah, there's two things. It's when you want to borrow money and interest rates are going up, it's really bad that interest rates are going up. But when you want to earn money off of your money, it's fabulous for you that interest rates are going up. You say when, mortgages were at 2% a few years ago, what were interest rates in savings accounts on CDs? 0.1%, whatever it may be. Now you can get a 5% rate in a money market account. Now you can get a CD for 5%. Now you could probably very shortly here get a 30-year bond for 5%, a 10-year note for 5%. So those people, especially those in the retirement years, Erin, that are living off of their income, the high interest rates are fabulous for them, especially if they take advantage of locking it up longer term, because when interest rates do come down again, they're still getting that higher rate. Because interest rates eventually will come down again.
And it's like gravity. So, we spoke a few days ago, and you had told people not to worry about some of the sell-off that we've seen in the stock market. I'm wondering how you feel now, Suze, and what is it that keeps you up at night when you think about financial concerns?
All right, so two things. The stock market. Most people are invested in the stock market where? In their retirement accounts, 401k, 403b, TSB, IRA, and they put money in it every single month. Most of those people aren't going to need that money for 10, 20, 30, or 40 years. So who in their right mind wants to see the stock market go up? You actually want to see the stock market go down exactly like it's doing right now, so that every month when you put money into your retirement account, your money buys more shares. The more shares you have, eventually, when it goes back up again, the more money you make. So for the long run, just be okay with it and actually kind of be happy, if you have time on your side, that the market's going down.
All right, Suze, thank you very much. We'll see you soon, and thank you so much, as always.